Hello everybody, welcome to my new weekly review. So today I will not do it with a camera because my camera is broken from yesterday. So yeah, that's why. So we will go over it. So the first trade I took last week was Euro USD. This was for me a 2.60% gain. So if I go to the weekly, as you can see, the weekly for me was a 3 out of 4. We had here a small weekly shoulder 1, had shoulder 2, we were at the weekly lows, we had still a bullish trend, we were making higher highs, higher lows, bullish M, false break of that. So this was a very nice region to take long. So we had here a 3 out of 4, only the candle close here was sitting against us, so that was nice. So then I will go to the daily, and on the daily we had here our bullish M. So if I must draw here, we had here our first leg, second leg, third leg, fourth leg, and within that we had another smaller bullish M here. We tapped these daily lows and we could have here an entry, and that's where I was looking for a next trade because I took the scale in there. So I went then to the 4-hour chart. What I was seeing there, this was the bullish M I could take here. We had first a diesel, then here first leg, second leg, third leg, fourth leg. We had here a buying zone, resistance, support. We went to the upside, took 2.6 gains out, and then yeah, we had this trade. So it was a good trade, scaling trade around 10 o'clock, 3 out of 4 criteria potential with a normal trading results. I would take 1/3 out and it would be on break even. So then the second one, AUDCHF. So if I go to the weekly, what can we see on the weekly? We can see we had a 2 out of 4 on the weekly. We touched the weekly low, so the buying zone was actually against us. So what I was counting here was this selling zone for us. But yeah, here was the buyer. So actually the supply and demand zone is against us here. So yeah, and the FIP was not tapped also. So actually the FIP was also not for us. And then the trend, yeah, the trend was bearish, so this was with us. Candle close against us, so this actually could be a 1 of 4 or yeah, 2 of 4. It depends on how you see it, but it was a really small selling region here, so that's why you could take it as a 1 of 4. So yes, so then I will go to the daily, and what can you see on the daily? We have on the daily the bearish W, and we tap the daily highs. But we can see if we see this as a 2 out of 4, then we need to have some more increase of the probability of the trade. So the best thing to do is taking a fake out or a pullback trade. So the fake out would be the trade closing here, just above these daily highs, between these wicks, highs, and these bodies, closing here in between, and then we could take a trade to the downside, but we entered before that. So this is the reason if we want to increase our probability that we take a fake out or pull back trade. So yeah, so then on the 4-hour, we took here the diesel. Here was the diesel, 4 candles. We just didn't went break even, and then we had here the diesel trade for a pullback that we could take, and then this would be a break even trade when I set this in my missed trades. So what was the feedback on this one? The feedback was this was a trade followed by the plan, but now if we have a 2 out of 4 trade, we want to see a fake out to increase our chance that it will play out, or we can sit here also, or pull back trade if we have a potential reversal pattern which we had there. So yeah, I'll delete that. Good. So then the third one, GBP/GPY is a -1% trade. So AUDCHF was also -1% trade. So we'll go to GBP/GPY. So this was this was yeah, a trade that was just taking me out. So what we saw on the weekly was a 2 out of 4. So what we had was a trend was with us, candle close, this red candle here was against us. The fib from the low here to the high was in the fib levels, supply and demand zone. Yeah, we just tapped here this selling zone, sellers here support, sellers again. So we just didn't tap this buying zone yet. So for me it was a 2 out of 4. And when I went to the daily, you can see on the daily that we had here a shoulder 1, had shoulder 2, and within that a bullish M. So I will draw here. So we had your shoulder 1, had shoulder 2, within that a pattern within a pattern, bullish M, fake out of that bullish M, as you can see. If you drew the line, horizontal line at this daily week lows, and then we went to the upside. So that's why. So yeah. So then we go to the 4 hour, and on the 4 hour we can see we had a reversal pattern in the form of a shoulder 1 here, had shoulder 2, and what we just tapped was our stop loss, as you can see here. But what was the reason we stopped out was because normally we take 10 pips below the shoulder 1 week, because we had an inverted shoulders with break. This is a clear break. This is our shoulder 1 low. We added 10 pips till this here, and then we went out. But the price here was 182 points. So when we go above that 1.5, so 1.8 was it, then yeah, we can add 15 pips. And if we added 15 pips, then this stop loss would be right here, 5 pips more below, and yeah, then the trade was running for around 2.5%. So that's the reason why yeah, we went out of the trade. So this could be a very nice trade for potential 5% on the normal gains, but if I would take it with now the fully taken partials at 2.5%, it would be just 2.5%. So then it would be a positive week for me already. So yeah, then EURUSD, this was again, yeah, this was a loss after that scale in from that 2.68 gain. Now we had a loss. So we will go to the daily, because yeah, I spoke on the weekly for the first trade. So now we'll go just to the daily. So on the daily, what could we see? There is a huge lesson about that. So what can we see? We had here a potential. We had here a really big supply and demand on the daily, as you can see. And the daily candle closed just under it. So what could we also see? That this could be your shoulder 1 here, head shoulder 2, potentially, just as you can see, and that could pull the price more down to tap again this daily buying zone, which we did. So what we could also see, if I just delete this, we tap also the daily highs here. So this is really important, because from here there are sellers kicking the price more to the downside. So this could happen again, and which it did. And here we took some new liquidity, because this was here a previous low week. We took some new liquidity, and then we went to the upside to the daily TP. So there is some huge lesson in it. If we tap the daily highs and we close yeah, at the supply and demand zone under it, yeah, we can have a huge possibility that we will go to the downside, tap new liquidity zone, which we tapped here to go back to the daily highs. So this can be one of the reasons that the price yeah, just went lower. So this was a huge lesson for me. And yeah, potential for me, this trade was just not taking it, because yeah, on the 4 hour you could see that I wanted to take there that bullish M. So the first leg, second leg, third leg, fourth leg, we tapped the daily highs here, bam, went to the downside, closing below this yeah, this daily supply and demand zone, we're under it, and yeah, I just took the long and we went to the downside for around -1%. So that was why we went to the downside. So this was a trade. So I said here, if you look on a daily perspective, then we see we closed back at our daily selling region and we tapped the daily high. So there is a much higher possibility that this will play out to the downside to tap again the weekly buying zone, which we did also. So this was a potential trade I could avoid, and that AUDCHF also. Then the last one, GBP NZD. For me, it was a good trade. If I go to the weekly, you can see we have a 3 out of 4. What we can see is we have here our previous higher low, and we just didn't broke it here. We hold it there up, and then we had here your impulse, then you had here your support wick, so that buyer zone, as you can see, that got triggered. We went to the upside, we came back. So the supply and demand zone was with us, the trend was also with us. Candle close was, not for us, not against us. If I go back, you can see this candle close was just, a doji, so it wants to go up, but also it wants to go down. So for me, it's neutral to see this. And then the fib from this low till this high, it was just still in it for me from this low till this high, the fib levels, because we had here a false break of these wicks. So 3 out of 4. Then I went to a daily. What can you see on a daily? We have a bullish M, bigger bullish M. We needed a pattern, and what we could see on the 4 hour was here that potential shoulder 1, head shoulder 2 with a resistance wick in the head. We just closed a little bit above it, above this previous lower high. We just closed above it a little bit. It is not the clearest inverted shoulders because we didn't tap yet that 61.80 at our shoulder 1 region, but for me it was still valid. We had enough space to take here some partials out and to the daily TP. So for me it was a trade we could take. Actually, we also had here a tap of the 61.80, went a little bit up and then we went down to grab some newer liquidity. So no problem. So if I go now back like this to my weekly review, so I had a minus 1.60 end week, and I could had a 5.8% if I took it followed by the normal rules back then. But if I added here with a GBP GPY trade 2.5% with it, then you need to do it plus, I guess, 3.5%. Then it would be around plus 2% running. So then it could be a positive week for me. So unfortunately the GBP GPY trade at stop loss was not wide enough. So this was the feedback for me this week with a daily on that Euro USD this daily selling zone, and that candle close that close below that supply and demand zone. So for the rest, just keeping up the good work. So if I go now to my missed trades, you can see for me AUDCHF, I was explaining it. As you can see, the screenshot wasn't added on, but I will go to AUDCHF. As you can see on the 4 hour, you could take this diesel trade like this for that pullback. So I will do the copy because I didn't copy it here like this. And then on the daily, you can see, this was just the break above that black line lower highs. And you can see we could trade the pullback till that potential shoulder 1, head shoulder 2 with that bullish M zone. I didn't take it because we had already a loss there, and I haven't yet backtested it fully, that pullback trade strategy. So that's what I also said here. I had already a loss on this one, and the pullback trades, I'm feeling not that sure to take them because I need some backtesting data for it. I was here, I could trade it, yes. And it was around 23 o'clock, you could take this trade. I was with a night shift, so I could take this. Then gold was also one, but I don't trade commodities. So not yet for me because I want to majorly focus on my Forex pairs. So I will go over it. So on the weekly, yeah, you had here your 4 out of 4. You had the weekly trend, the fib, the candle close, supply and demand zone that got triggered here with that support wick. Very nice. And then you can see on the daily, you have that bullish M. Like this here, you have that bullish M. We tap the daily previous structure, daily zone, supply and demand zone. And this is, again, a senior trade because we had a major daily supply and demand zone. If you look more back to the history, and you had here your fib completion. If you take your fib from the high here to the low, minus 6080 fib completion here with a daily supply and demand zone. The 4 hour was also still bullish here, higher highs, higher lows. So this was even nicer. And then yeah, you could take your trade on break even. And then yeah, we went back to the downside. So this was my weekly review. I hope you liked it. If you have any questions, you can ask me. So see you next week. Bye, guys.